Hello, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, August 7th, 2015. This week, S&P 500 fell about 1%, and I think it fell right back to support. So we'll look at the S&P 500 and whether or not it can maintain its uptrend. QQQ is again retesting its breakout for the second time in as many weeks. I think the small caps are kind of bore the brunt of the selling, of the recent selling, and we'll look at IWM as well as XBI, the biotech ETF, and cybersecurity ETF, HACK, which is really are all at support and are ready for a rebound. Bonds had a pretty good week, and they gained on Friday despite strong jobs report. And utilities followed suit with bonds as well. So there's some sort of a rotation into safety assets possibly going on. Oil finally is at support from, I believe, May. So from March rather. So I think we may see some sort of a short covering rally. And we'll look at one of the oil-dependent countries that are really bearing the brunt of the selling in oil-related stocks, and that's RSX Russia ETF. Okay, so let's look at the chart of the S&P 500 large cap index. So this week we had all this week pretty much we had the price was sliding down, and this Friday we reached as low as the 200-day moving average, this green dotted line, and retested this 200-day moving average and closed above it. So I think for now we're holding support, and there's quite a bit of support here from these lows here, even though there was a breakdown here in June. I still think that there is quite a bit of support at this level, because I think this is kind of like, the price moved down and then moved right above this level and almost made an all-time high. So I think this support is still valid. Now, should this support give, I think the next logical level, of course, would be 2060, 2055 here, and then of course 2040, 2039. So that's pretty important levels. We're not there yet, so I'm not really terribly worried about stocks at this point. I think it's kind of like a normal ups and downs of the stock market. Excuse me. As far as market breadths, I think we're still in the upswing as far as the market breadth oscillator is concerned. But it's not a very strong upswing, because we can see we came right back down. So on MACD, you can see we're already oversold in the negative territory. So I think if a bounce will come, it may come pretty soon already. Maybe even next week we'll resume our uptrend. I don't know for sure, of course, but this is a bullish security and we're already oversold. Therefore, me personally, I'll be looking for a re-entry on the long side. Let's look at QQQ, Nasdaq 100 ETF. Well, this one, of course, you can see it's stronger than the S&P 500, because we had a breakout here in mid-July. So far, we had a breakout and we came right down to the breakout area, really, because this is an exchange traded fund and consists of literally 100 stocks, or even over 100 stocks. So it's not an exact kind of number where the support is. So I kind of give it a bit of an area. So I think it broke out above these highs, about 111 here, and then came down to retest the support. So right now we're actually a second time retesting this breakout. I still think for now we're holding this breakout, and if we hold here and resume uptrend, I think we may see all-time highs again soon. But I just wanted to point out one thing here, is that this is an on-balance volume indicator. I think it's pretty useful. to kind of track the underlying volume patterns. You can see that volume is made a lower low on balance volume, made a lower low, while QQQ itself made a higher low here. So if this is a, you know, any if this indicator is any good, it may show us that we may see slightly lower prices ahead before resumption of an uptrend again. So, if we judging from the S&P 500 and next chart I'll show you, which is IWM, there's a possibility that we may see lower prices for QQQ first before uptrend resumes. Same concern still for advanced decline line. We have not had a breakout in advanced decline line. You can see it's trending down. While the QQQ is trending up and made an all-time high. So this shows that there is participation, lack of participation in this rally. In other words, large caps are pushing higher, while the small caps are not participating as much in the rally. And next chart shows IWM, the Russell 2000 index. I think that this is a kind of, this sort of bore the brunt of the recent selling. So it hit an all-time high here in mid-June and then corrected to as much as over 7% from that time point. For comparisons purposes, S&P 500 hit an all-time high here and now down about 3%. So I think IWM small caps are sort of bearing the brunt of the selling. Also, we had a breakdown in advanced decline line here. So not a very good sign. The same goes for, I'm sorry, I meant to say on balance volume and for advanced decline. You can see the advanced decline line made a pretty clear breakdown right there. So even though you can see that IWM held support for now. So it's kind of like the advanced decline line was a leading indicator, and then the price followed as well. So you can see that MACD is in a negative territory and it's quite oversold. Same as for Brett's momentum oscillator, also in a negative territory and quite oversold and below its 10-day moving average, this black line right there. So this particular index is oversold, even though and also within a bigger uptrend. So I think this is kind of like a recipe for a bounce higher. And I think once we see a turnaround, like for example, bread thrusts here, you can see we had a nice move up, moves higher afterwards. This one obviously didn't work, even though we had a bread thrust. We had almost immediately we rolled over. So no indicator is perfect and no system is perfect. But I think that at this point of the game, I think we're quite oversold, and I think if we get a breadth momentum oscillator signal or some other signal, we will push higher from here. For now, we're still sort of correcting. Some of the sectors within, well, XBI, which is a biotech sector, but this is sort of like a almost an equal weight biotech. Celgene, Biogen, and Amgen are kind of like mere mortals within this ETF. So they're about 2% weighting, maybe even less. So in other words, this is a very broad and diversified biotech ETF. It holds a very broad basket of stocks. And you can see that from all-time high here in mid-July till this low, this is about 15% correction. So it's pretty significant. But then again, XBI and biotech in general, it moves a lot. So this, in a grander scheme of things, this is not a very big correction. It's kind of similar to what we had here. And then you can see that afterwards we had a nice buy signal right there and a pretty significant move higher. So at this point of the game, I'm still treating this XBI as an oversold security which is still within a bigger uptrend. So you can see MACD is in a negative territory, oversold. So I'm looking for basically a re-entry opportunity. Okay, so next chart shows Hack, the cybersecurity ETF. Actually, a very similar pattern to XBI. It's an uptrend in security and had a now within a corrective mode. And this is about a 13% decline, and also at support right there. So $29 at support. MACD is in negative territory, so I'll be looking for a re-entry on the long side once the uptrend resumes. Same with XBI. Just go back for a second. I guess we're about support level here. You can see from this broken support or the broken resistance here. So yeah, we're pretty much at support for XBI and for Hack. Next is TLT, 20 plus year Treasury bond fund. So there's quite a bit of strength in bonds, and especially on Friday, kind of surprising, bonds gained 1.3% despite a pretty strong job reports. We had a good job numbers, and even though TLT still gained, and in fact it closed above these two resistance levels. So this is, pretty interesting intermarket behavior. Does it mean that bonds are sensing something that will be happening ahead of the stock market? It's entirely possible, and I actually have a position open in TLT from back here, and this was our buy signal right here. So we held support 3 times really, and then rallied in a third attempt. So I think bonds are set to continue pushing higher, and this is doubly interesting because there is lots of talk about Federal Reserve raising interest rates. So maybe there is some sort of a future event that bonds are pricing in right now. Bonds or other utilities are dependent on borrowing money and financing the operations. So the lower the interest rate goes, the better utilities do. And you can see their charts are actually quite similar. We had a pretty nasty sell-off in utilities all the way into June, and corresponding to breakdown in bonds, as I just showed in the previous chart. And then once the bonds started to rally, we actually continued higher. And finally today, utilities were able to close above the 200-day moving average. And this is, again, a positive sign, as many people will say, okay, if the security is above the 200-day moving average, then it's in a bull market. I actually, well, I doubt here there was a pretty significant breakdown, and what I think this kind of like a bear trap. The price went down quickly and then recovered just as quickly. I think it was getting ready to enter a bear market, but I never considered XLU to be in a bear market just yet, even though this red line, the 50-day moving average, moved below this green line, the 200-day moving average, because that's one of the ways to say, okay, now security is in a bear market. So I think the XLU is set to continue higher, especially if these levels are cleared. There's quite a bit of resistance here in the $45 area. So if XLU manages to close above them, then I think we'll see more money pouring into utilities. All right, finally, well, almost finally, oil. So a few weeks ago, I pointed out this pattern here, which is a quick drop and then like kind of like this is a bear flag. So a quick drop and then sort of like a flag a price pattern. And then I point out that this breakdown here, if it was to be the true breakdown, would call for prices to be in this area, in the $43, $44 area. So actually this Friday we closed in just exactly in that area. Still, at this point, I think oil is at support from this March low. So I think we are getting ready for some sort of a short covering rally in oil. I think it may take oil to, if this bear market rally now materializes, at this right here, then I think that initial target would be like around $49 and possibly even as high as the 50-day moving average around $54 or so. So yeah, so basically I still have a short open in inverse ETF called SCO, but I have a trailing stop on it now. So if the relief rally will start, that one will get covered. And then finally, I wanted to point out one of the countries that are heavily dependent on oil export and oil revenue, and that's Russia. So Russia ETF actually pretty heavily traded, 9 million shares traded today. So also bearish security, way back when I pointed out that this is a bear market rally, and we had a short signal here and then another short signal here. This short signal actually, depending on where you put your stop, you may have held it open, even though from here it rallied, from what is it, 19 to about 20.75. So depending on where you put your stops, you may have held this short open, but this short was clearly worked out really well, and it's been sliding ever since. Wanted to point out this. It's called a death cross, where a red line, which is a 50-day moving average, crossed below this green line, which is 200-day moving average. So this is now officially a bearish security, even though you can see here it was the opposite. Red line was above the green line. Now, I never actually doubted that this was a bearish security because I use other methods in addition to this 50 to 100-day crossover. So even at this point, it was still bearish to me. All right, just wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We have a blog where this video will be posted. We also have a public chart page, so please sign up for our mailing list as we're getting ready to start a trading service, trade alert service. We actually have a pretty firm date now for start of the trading alert service, and that's going to be around October 1st at the very latest, possibly even earlier, possibly sometime in September. So if you sign up for our mailing list, you'll be the first in line to get a promotional pricing on that service. We have a Twitter, Facebook, YouTube, and StockTwits accounts where we post quite a bit of information, so please do follow us there as well. Thanks for watching, and have another great trading week. Bye-bye.